Yeah, hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video, I'd like to look at how the four USE minis unfolded yesterday, which was Wednesday, July the 25th. So if we start with the standard and automatic setups, firstly on a 3-minute ES, you can see we had two setups here. To be perfectly honest, both of which would have actually ended up as losing trades. And this is something that amateur traders find very difficult to know or understand, is that they all seem to want that everything is a winning trade. Now the reality is that losing trades will, and they do, unfold. The trick to being a successful trader is to keep the losses small, and we do that by using position sizing, which varies the number of contracts, lots or shares, to keep our position sized. In other words, a constant percentage risk on each different trade. That means that when we have a losing trade, it's kept small at what we call -1R, in other words, one losing risk unit or -1 risk unit. So here, yes, there could have been a 2R loss. If we move over to the NQ, as you can see, it would be really quiet with no trades, no automatic trades at all. Very quiet. We go over to the Russell Index. There's that same TS3 cell as we had on the ES, so you wouldn't take two trades on two different markets at the same time, because that would be doubling up on your risk, and obviously that's not what we want to keep our risk small and under control. The other market is the YM. Now this was a very interesting market, because here we actually had a lovely TS3 buy setup here. If I zoom in a bit, this would have been a perfect standard and automatic trade setup, because the STF is black, therefore any MTPredictor trader could take this. So if we place the analysis on, can you suddenly see how the market went up to its first target, and there's the first target there, and if I zoom out, you can see that that actually meant that you'd have been placing a long trade off what was the low of the day. You'd have held it through to the first target, and you'd been taking profit at what was basically the high of the day. So one trade from the low of the day into the high of the day, that's about the best a day trader can do. However, the important point is this number here. Now remember, I said we had potentially two losing trades here, but the losses were kept small at -1R. Now the difference with position sizing, again we're using it here to keep our initial risk the same, in other words the same percentage risk as we did on the ES, but here the profit was much larger than this initial risk. In other words, 6.4 times the initial risk. And can you suddenly see how, even though there was two losing trades and only one winner here, a winner of 6.4R was far greater than 2R loss, which means you would have made money overall, because 6.4 minus 2 is 4.4. So in other words, you'd have made 4.4 times your initial risk overall yesterday on the USE minis. And that's the power of position sizing, in that even though you can have an approach that has more losing trades than winners, because the losses are kept small and the profits are large, much larger than the initial risk, you can actually have a profitable system overall. And if you look at most professional traders, you'll actually see that that's what they do. In fact, most professional traders will only have a win rate of 40 to 45%. Most amateur traders try and look for 80%. So what I can't understand is why most amateur traders want to try and do something different to the professionals. The professionals are the guys who make all the money, so it seems totally nonsense to me that amateur traders think they can do something different to the professionals. Why don't they just see what the professionals do and learn from them? And this is what professionals do, is that they keep their initial risk small. So when when the losses come through, they're kept small at -1R. However, they have systems and approaches that when the profits come through, the profits are allowed to run, and as such come out at values that are much higher than the losses. And this is how you have an approach that has small losses and large profits. You may well have heard about that over time, but this is how you do it. For advanced traders among you, you could have actually pyramided here. So you could have actually said, well, here's the first trade going up here. It came back down in a lovely ABC correction into a TS3 buy setup here. If we analyze this, you can then have taken another trade here. You wouldn't really have come out of the first target because you'd have had confidence to allow it to run up to where the first target would have been on the first trade, and that's around this typical wave 3 WPT profit target here. So you could have come up here with your second target and actually had another 6R on your second position. So for the professional traders among you, by pyramiding or adding to this position here, you could have come out with 6 plus 6.4. In other words, 12R profit for the day. The only thing I will say is when you're pyramiding or adding, as soon as you come into a position, make sure you put your stop on the first position to break even. So when you're filled on this first one, you want to make sure that your stop is brought to break even on your first position. So that means if you're stopped out here, you'd have been stopped out for break even on your first position. In other words, you don't increment your losses. So overall, for the standard and automatic trade setups, just that, I'm not looking at any advanced analysis here with the MTPredictor software in today's video, just purely and simply on the automatic setups. Yesterday, it was a very, very good day where yes, we had a couple of losing trades, but the losses were kept small. But the most important thing is we actually had a very good trade on the YM, and the important thing is that this profit was much, much larger than the initial risk or the losses on the ES, and that is the true key to successful trading, having an approach where you have small losses and big profits, and that's the fundamental building block upon which MTPredictor is made. And looking back on this, an absolutely brilliant day on this particular trade, because if you're a day trader, to be able to catch the very low of the day here and take a long position, to then ride it all the way up and then have your profit target, again, which was placed on the chart well in advance at the time of this setup, to come out and take you out at what was the high of the day. So long from the low of the day, take profit of the high of the day, is about the best any day trader could ever want to do.